Welcome to the Real Estate Guys radio show. I'm your host, Robert Helms. There's a ton of questions out there, we know, because you've sent them to us. Today, it's another edition of Ask the Guys. Your questions, our answers, on the Real Estate Guys radio program. As I speak, inflation is robbing you at a rate north of 10%. Last year, the number one zip code that Mid-South homebuyers offered income property to Real Estate Guys listeners in appreciated by 21%. To harness that spread and protect and grow your wealth in the current economic storm, you need the 2 decades of experience in renovation and management that Mid-South homebuyers brings to their investors. Every home Mid-South offers you will have brand new components, a new 30-year roof, and a high-quality renter, all in a price range under $150,000. Their empathetic property managers will use your ROI as their North Star, while the lack of repairs on their totally renovated properties contributes to their almost 4-year average renter stay and 99% occupancy rate. Learn about their lifetime occupancy guarantee and total 1-year maintenance guarantee by emailing midsouth@realestateguysradio.com. That's midsouth@realestateguysradio.com. You'll be glad you did. Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. Joining me in the co-host seat is our financial strategist, Russell Gray.
Hey, Robert.
We love talking about real estate. What we really love is when our incredible listeners have questions about real estate. We run into listeners at live events all the time, getting great conversations over a beer in the hallways between sessions. That's always fun. But every 8 or 10 weeks, we like to do a show where we put you in the driver's seat. We call it Ask the Guys, and we reach into the mailbag of email to see what questions you have and what's on your mind. And obviously, we cannot answer every question personally, but we try to find questions that we think have kind of a theme that are universal enough that everyone will glean a lesson or two. We only have 2 caveats, and that is, number 1, we don't give advice. We only give you ideas and information. And you take those ideas and information and go get some professional advice. And caveat number 2, we're not professionals, we're not lawyers, we're not accountants, we don't even play them on TV. Occasionally we will have something of an answer that has to do with tax or legal, but it will basically be, hey, go find this out from your legal professional. And that's not just a big CYA, that's because law and tax law are practiced differently in different places. We have listeners in 190 plus countries, and I think we'll hear from at least 3 of those countries today. And real estate is not the same everywhere. So just know that we'll give you the best ideas and information that we can, but you may need to consult a professional with that. Let's go to our first question. This comes from Severio in the Bronx, New York. Hey guys, how can I get into real estate investments when I don't really have the personality to ask someone for a rental increase? All right, well, that's a simple question I thought we'd start off with because it speaks to something we don't often talk about. On the Real Estate Guys, we do talk about personal investment philosophy, that each person has a different reason, wants, needs, risks, all that stuff when it comes to their portfolio. What we don't often talk about is there are different personality types. Some people who have no issue at all talking to people, glad-handing, saying hello, they probably make great property managers because they can walk up and say, hey, how's it going? And by the way, we're increasing the rent, no harm, no foul. But you might not be that person. And so I think the answer is you can become a real estate investor kind of no matter what your personality is like.
I think that's 1,000% true. And it's really the core thesis of everything we teach in our syndication training, because when people are organizing a business, whether it's a real estate investing business or a business of raising money to invest in real estate or other things, the main responsibility is to identify everything that needs to be done. If you don't know what needs to be done, you can even hire people to help you do that, coaches, mentors. So really, it's just you taking personal responsibility to make sure that everything gets done. Dan Sullivan, a guy who has a company called Strategic Coach, wrote a book called Who, Not How. And I think a lot of times we have been trained in our educational system to fulfill specific functions. We think that everything that needs to be done, we actually have to do ourselves. Robert Kiyosaki would tell you that's A student mentality. And if you're an A student and you're very competent, you tend to lean towards that you're the best answer for every problem. In a lot of ways, Severio, you have an advantage because you recognize right out of the gate with humility that you're not the right person for the job. And that's great because you don't need to have that job. You can hire a property manager, to Robert's point, that's very good at it. That's their profession. You just need to know that it needs to be done. And so when you're looking at your portfolio, is it performing? You compare what it's going on in the marketplace and what the market rents are and what they should be and where yours are and the moves you need to make sure your property is operating properly. When you identify that gap between the way it is and the way it needs to be, then you have to ask yourself not how do I fix it, but who can help me fix it? And that's where you go get the property manager.
Think of it like you're the orchestra conductor, and a world-class, award-winning orchestra conductor doesn't play any of the instruments during the performances. Oh, sure, they probably play an instrument or two and they know music theory, but their job is to get the best out of each performer. And that's your job. You're in that seat and you don't do it all. And sometimes when you start out, you are doing it. You're knocking on the door and asking for the rent. But as quickly as possible, you need to get that off your shoulders and into professional hands. Not just because it's what they do and they're good at it, but because it also creates an arm-length relationship. You don't want to ever have to be standing there in front of a tenant and having them, come up with an excuse as to why they can't pay and you having to, feign interest and all that. It's easier just to have professionals do it. When it's time to raise the rent, the property manager knows that. They don't just guess. They understand the market. They're looking at the competitive set, what other similar places are doing and what the quote unquote going rent is. And then they make a suggested adjustment. Normally, if you're the owner of the property, you would decide, well, do I really want to raise the rent or not? I've had tenants over the years that have stayed 8, 10, 22 years. And when you have someone in a property that long, you tend to be a little more gentle on them because they have proven that they are good, responsible tenants. And so I've definitely had times where I haven't raised the rent as much. But I will tell you, it has been years, decades, in fact, since I've had to personally ask anybody for a rent increase.
Well, and I think the bigger question here is how can I get into real estate investments but not have whatever it is? Personality, resources, money, knowledge, experience, credit, you pick whatever it is.
Fill in the blank.
Yeah. How can I get started? And it starts with education. Obviously, listening to shows like this, great. There's books that can be read, seminars that can be attended, clubs that could be joined. And I would argue it's not just about learning, but it's about networking. And I think that when you get around other people who are working to solve the same problems you are, that have journeyed through the progressions of growth that you're going through, somebody's going to be behind you and somebody's going to be ahead of you. Robert, you often say, quoting someone famous, I'm sure, everybody who is now at the front of the line was once at the end of the line. And we all know that that's the way it works. So we have a resource. Robert has recorded an audio workshop called Personal Investment Philosophy. You can get that by sending an email to PIP, like Personal Investment Philosophy, at realestateguysradio.com. And that's not a bad place to start. But the best place to go is get yourself into some type of a club or networking event where other real estate investors are there and just ask questions just like you are and find out how other people are solving those real world problems. And I think you'll quickly find yourself developing into a successful real estate investor.
All right. Thanks for your question. The next question comes from Matt in Virginia, Minnesota. Not Virginia, but Virginia, Minnesota. Hey, guys, I need a strategy. I'm 34 years old. I've got $50,000 saved, a house that needs some fixing up, no debt to my name, no family, and I really, really want to start syndicating real estate investments and move to a market that's about to boom. Should I spend $25,000 to fix the house so I can AirBNB it, using its cash flow to keep me afloat while I start syndicating? Or should I fix up the house and sell it now, yielding me about $120,000? Or is there some other strategy you suggest? How much of what I own should I put into my first apartment building? P.S., and I'm actually serious about this question, should I be looking for a committed romantic relationship while I'm starting the process of becoming a real estate syndication professional? All right, Matt, well, I want to throw that last part in there because we probably do have something to say about that, having coached real estate syndicators for more than a decade now. But let's start at the top. We'll toss this one to the financial strategist with the caveat that we can't tell you what to do, but I know Russ has some thoughts on this.
I do. I think that when you start a business, any business, you're going to have startup expenses. And so cash is a premium, and a business is going to go through the setup, which you're expending a lot of cash. And then at some point you have the ramp up where you're generating revenue, but maybe negative cash flow. So you're going to have a drawdown on cash reserves. And then you're going to get to the point where you have positive cash flow. That's what I call the baby breathing. You've given birth to a business that's actually sustaining itself. It may not be strong. And then you nurture it into a big, strong, healthy adult business. To do that, cash is at a premium, cash and credit. Since you have no debt, I think that making sure that you have established good credit lines and have access to credit, although in today's market, I'd say you can't count on those. Mistake I've made, and I've been open about that back in pre-2008, was I relied heavily upon my great credit and extensive credit lines, and through no fault of my own, but just what was going on in the 2008 financial crisis, all those credit lines got shut off. And all of a sudden I was completely illiquid. So I have a lot of passion about making sure you have good liquidity while you're in that startup phase. So if you're going to invest $25,000 in the house to fix it for Airbnb, that is starting a business. You're not saying whether you've done Airbnb before, if you have any experience. So you run the risk that you don't know what you're doing, that you're going to make some learning mistakes, could cost you some money. So to me, if you're serious about being a syndicator, I would focus on being a syndicator. Now, if you decide you want to syndicate Airbnb, that could be a little bit different. But if you've never done it before, I'm not a fan of brand new syndicators going out and practicing their craft with investor money. Either invest with somebody who knows what they're doing and has a proven track record, or wait until you do. You talk here about apartment buildings, so I suspect that what you're planning on doing is getting into the apartment business. So if you're going to do that, I would stay focused. So if it were me, I would either sell the house or refinance it at a positive cash flow, maybe rent it out and let the tenant make the payment while you freed up some of the proceeds that you can then use for your business. A little riskier because, if the property doesn't cash flow, then you could lose the property, but at least you have the equity, or just sell it outright and use the cash to start your business. You're going to need a little bit of cash to get your business started. You're probably going to want to have some skin in the game when you get that initial deal. And in the part about relationships, I'm going to leave the romantic part aside for a moment. And one of the best investments you'll make is in building relationships with people that could be your prospective partners, prospective investors. And so whatever you choose to do in terms of moving to a new area that's a position to boom, the first thing you want to do, as we mentioned in the first question, is get plugged into a network of people that you can learn from and that you can partner with to get deals done. And syndication is very much a relationship business.
A couple of things to add. I think right now you have to watch the short-term rental markets carefully because many of them are oversupplied and the returns are not that good. In fact, we're seeing more distressed short-term rental properties right now than probably ever before. So that doesn't mean it's a bad investment because there are markets that are absolutely doing fabulous. But don't just assume any house that you happen to own, you can just quote unquote Airbnb it and make lots of money. That is a faulty thesis. However, I will say that if you were going to spend the money to fix up the house and sell it, right now we have strained inventory in most markets. And it's not really because there's so many buyers out there. It's because there's so many sellers or would-be sellers who have 3% interest rate mortgages. And they don't want to trade up like they might because of other circumstances in their life to a bigger, nicer house in a better neighborhood because they don't want to give up the loan. And so in many, in fact, I'd say most markets right now, we have strained and constrained supply. Therefore, if you can be a seller and not a buyer at the same time, it's a good time to do that. Also, the rent-buy equation that people often look at, which is more expensive to rent or to buy, that changes over time. Right now, it's a lot more expensive to own property than to rent property. And so ultimately, we're big believers in buying houses, even to live in. But if you have scarce resources, you can probably find a comparable space to live in that would cost you less money, which will give you more cash for the things Russ has been talking about.
I have one additional strategy for you, Matt. You may consider if you were to put the $25,000 in to fix the property and then you were to sell it with an owner carryback. Now what you have is a high yielding note, which provides you the income that you need without the landlord hassles. You're probably going to get your $25,000 back in a down payment. And now you've got your capital back, you've got cash flow. And if for whatever reason the property doesn't perform, in terms of them paying the note, you can just go right back in and take over the property at a lower basis. So that might be something else you would consider since you're in need of retaining cash and also generating cash flow, but you can do it without having to take the risk of an Airbnb or even really a typical tenant, because somebody that has bought it is going to treat it like an owner. And as long as you vet the person, there are people out there who either can't document their income properly or for whatever reason maybe have an explainable blemish on their credit, and they would find your owner carryback to be a very attractive option for them, and they'll pay a premium for it.
Love that idea. Worth considering. You've got to crunch all this stuff in your mind, Nat, and figure it out. Let's talk about the relationship part. I would just say that there is no wrong or right answer, and you can't design when love will enter your life. However, I think you're entering a new chapter. And if you're going to go be a syndicator, all kinds of things could happen. And the people you'll be around as you do that, that could be a really great place to meet somebody who gets what you do for a living. If you were to find somebody right now and then go through totally changing your life circumstance, that could be harder on both of you. So at 34, don't wait forever, but there's no rush. It's Ask the Guys. Your questions, our answers, lots more today on the Real Estate Guys radio program.
Real estate investment advice right in your mailbox. Sign up for the free Real Estate Guys newsletter at realestateguysradio.com.
If you love real estate and have always wanted to own your own business, listen up. The Real Estate Guys and their panel of experts want to teach you how to go full-time fast in the real estate syndication business. These next few years may go down in history as one of the best times ever to acquire investment real estate. There are deals everywhere if you know where to look and how to assemble the resources. The Secrets of Successful Syndication seminar will show you how to make big money doing big deals from a team of experts that have syndicated projects totaling more than $1 billion. Don't wait for someone to give you a raise or create a job for you. Attend the Secrets of Successful Syndication and learn how to build a team, raise capital, find deals, and make full-time money in 6 months or less. Go to realestateguysradio.com and click on events. All the big players use syndication as a way to diversify risk, optimize profits, and earn big money. You can too. Go to realestateguysradio.com and click on events.
Self-storage is an asset class that has stood the test of time. Going into the Great Recession of 2008, self-storage had the least negative impact of any of its commercial real estate peers, and it had explosive growth coming out of that time during the recovery. Fast forward to 2020, and you'll see that same pattern during some of the worst part of the pandemic. Hi, my name is Dave Zook, founder and CEO of The Real Asset Investor. Our operating partners are some of the best in the business, and we've had great success over the last decade buying mom-and-pop operated self-storage facilities and taking them to the next level by forcing value through increasing the square footage, adding climate-controlled units, bringing in our professional management teams, and turning the project into an institutional target. We have self-storage investment opportunities available for accredited investors who are interested in investing in this space for cash flow, tax impact, and huge equity appreciation. Reach out to us today at selfstorage@realestateguysradio.com.
Hi, this is Lawrence Yun, Chief Economist with National Association of Realtors, and you are listening to the Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Heard every weekend on this great radio station all the time at realestateguysradio.com. Every 8 to 10 weeks, we like to have you ask us questions, and you do that on the website at realestateguysradio.com. You'll see the little button that says Ask the Guys, and we cannot answer every question, but we love to get questions from listeners. Send off your question, and who knows, maybe you'll be on the next Ask the Guys episode. Our next question comes from Raphael in Petah Tikwa, Israel. All the way from Israel. Excellent. Hey, guys. I want to get into real estate, but I'm a very careful person. I need information on what's the best way to learn and what to look for when I want to start building equity from nothing. All right. Well, Raphael, congratulations for taking charge and wanting to become a real estate investor. Not everybody does that, but it can certainly be a wonderful, wonderful way to build a financial fortress around your family. Let's talk about getting started because it's different for everybody. And I think that the resource that Russ mentioned earlier, the audio workshop that is totally free, would be a great place to start. It deals with developing your personal investment philosophy, who you are as an investor. And if you'd like to go through that, only takes 25 minutes, a little more if you take a lot of notes. You can get that by sending an email to pip@realestateguysradio.com. PIP, like personal investment philosophy, at realestateguysradio.com. So that's to start with you. But we believe in this kind of 4 steps when it comes to buying a property. Personal investment philosophy is the first. So picture 4 boxes on top of each other. The first one at the top is you. Figuring out who you are, why you want real estate, what you want it to do for you, how it's going to fit into your busy life, how it's going to fit into your portfolio. So that's number 1. Once you've got that figured out, you know why you want to buy, then you need to think about a market or markets that make sense. Where's the real estate markets I can be in? And we don't just mean geographic markets like a place, although that certainly is a market, but also things like short-term rental or residential assisted living or investing in apartments via syndication. So what markets, what people do you want to serve? Where in the world do you want to be? I like to say live where you want to live, but invest where the numbers make sense. Maybe rentals around you don't make sense, so you have to look elsewhere. So that's number 2. The third box is really, really important, and that is assembling a team. These are the people you'll need to help you get from education to effective action. Brokers and lenders and tax professionals and attorneys and sometimes contractors and architects. You put the team together to help you, since, as we talked about earlier in the show, you can't do it all yourself. At least that's a really hard way to wealth. And then the fourth one is the property. Once you've figured out who you are, where you want to invest, and the team you need, then you find a property. And I think that's the information you need to start building equity, is to figure out who you are, figure out the markets that make sense. Earlier, Matt talked about a market that was going to boom. What he's doing there is putting out the kind of market he wants to find. He wants to get there ahead of time. He wants to skate where the puck is going. We're here in the Stanley Cup season, so we might as well use a hockey metaphor. But if you are trying to get started, I think obviously one of the big steps is education.
I think when it comes to your team, part of your team are all of the service providers that you're going to need in the boots on the ground team in a particular market, but you're also going to need advisors and mentors. And so as you invest in your education, as we've been kind of a theme as it's coming out, you also want to invest in your network. Spend time with people that are doing what you want to be doing. Learn how they go about their business, the way they think, the way they handle problems, how they see opportunity, how they organize their resources. The list goes on and on. If you're going to be using debt, then figure out what kind of product niche you're going to be working in and find someone that brokers that debt and have them begin to coach you up on building a borrower profile that's going to allow you to access the credit market. So that's really important. The one thing I'll say about equity is something that I think a lot of people miss when they first get started in real estate investing, because they think there's a difference between cash flow and equity. And there is and there isn't. True equity is a derivative of cash flow. So if you buy a property that's the ugly property and you fix it up based on the notion that somebody will pay more to buy it, and that's how you're going to create equity, that's a way to think. But really, if you dig down deep and figure out what you're really doing, you're figuring out somebody who's willing to pay a bigger payment to live in that property. And that bigger payment yields a bigger mortgage, which yields a bigger purchase price. In rental properties, like true rental properties, like apartment buildings, the equity is a direct derivative of income. It's not a comparative based on what some other homeowner's willing to pay. And income becomes really important. And when you understand the math, now you can calculate what your return on investment is going to be. If I put, $5,000 into installing washers and dryers in every unit, then I can charge $75 a month more per unit times however many units equals this much cash flow based on the cap rate. That's this much equity. That's the way to think about equity. If you just think about equity about making it prettier and more desirable, that's an amateur way to look at it. What you want to do is think about how you can make the property more valuable in terms of cash flow to the demographic you're seeking to serve, and then doing a mathematical calculation on what that really means based on the going rate of properties in that particular niche, in that particular market. So a little bit sophisticated, but if you get around the right people, the right mentors, people who do this kind of thing all the time, you'll quickly find out that's the way they think.
Well, and I love the part about getting around people, because you can read and you can listen to podcasts, and you should do that, and you should watch YouTube videos, and you can learn a lot. but that's not going to get you into the game. That's going to let you watch the game and understand what's happening in front of you. To get into the game, you got to take some action. So love getting around folks. If there's a local investment club, any real estate event you can go network at, that's great. I think another way to learn is to apprentice. You may have some skills. You may have something to offer a busy real estate person, whatever part of the industry that might be in, and you can provide value to that person while you learn. I think that's a tremendous shortcut. I watched one of my good friends become a top real estate agent, one of the top agents in the state of California, because she had started as a top agent's assistant and worked for him for 5 years before she flew from the nest and started selling herself. And she had a tremendous first year because she was already used to being in an office that had tremendous production. She saw the systems, she saw the marketing techniques, she saw all of that firsthand. So find someone in your life that is doing real estate at a good level that you'd like to emulate and spend time with that person. It's Ask the Guys. Your questions are answers. Our next question comes from Hannah in Wichita Falls, Texas. Hello, guys. Thank you so much for the valuable information you guys provide. My husband and I have been listening to your podcast for many years. We have this opportunity to buy a small motel with 10 rooms, but all of our savings is sitting in the rental homes we own. We don't really know how to utilize the equity. Currently, we don't have W-2 income. So what kind of loan could we get to buy the motel? Is selling the rental homes to buy the motel outright a good idea? Or should we try to get a loan? And what kind of due diligence should we do? We've never owned a commercial building, so it's a bit overwhelming. We don't know where to start. What are your opinions? All right, Hannah, well, we have a lot of opinions, and especially about a lot of this stuff. I'll first say that you're on the right track. You're thinking about it from a financial perspective. You're looking what you have to work with right now, these rental homes that are unencumbered, and you have something that you're interested in, a 10-room motel. I will say that's a difficult size property. Most commercial loans are going to have a minimum of $1 million or $2 million. And the reason is simple. Commercial lenders don't want to go through all of the work necessary to underwrite the borrower, the deal, the market, the rent rolls for a small loan. So I'm guessing in Wichita Falls, Texas, that a 10-room motel isn't that much money. So because of that, getting a loan at all for a property might be difficult of that size. The second thing is you don't have too many economies of scale in a 10-room motel. I had an aunt and uncle for years that owned and operated and lived in a 10-room motel in, and Russ knows this place, Morgan Hill, California. So it was on Monterey Road, kind of the main thoroughfare, and people were driving by, their number one source of tenants, people driving by, pulling off because they were tired and needed a night's stay. That was a really tough job for them. And because the pricing is so competitive in those types of things, you really have to figure out your value add management. Are you guys going to move in and do that? Right? There's a bunch there. But as far as what it takes to get a loan, well, let's toss that one to the financial strategist.
Yeah. So again, I think the first question you really have to ask yourself is this property worth doing? And so Robert has addressed all that. I'm going to make the assumption you've done that analysis and decided, yes, there's something here that makes it worthwhile and it's worth doing. So the question is how do you get it done? Well, unlocking equity in small rental homes could be a great way to do it. And so there's actually a report we have in our special report library about how to get the max cash out on your properties. And you can get a copy of it for free. Just send an email to cashout@realestateguysradio.com, cashout@realestateguysradio.com. Now, if you have enough money in those properties, it can be freed up that you could move all that equity into the hotel. You could do that. Now, there's a huge risk in that because if that hotel doesn't perform, then it takes your entire portfolio down with it. So I'm not suggesting you do it. I'm just letting you know it could be done. Now, you may decide to do something more conservative with the equity in those properties, and I'd make the argument that might be a good idea, but that's a different discussion. In terms of qualifying, you just want to meet with a mortgage professional who knows the state of the union, who can give you kind of a back of the napkin underwriting. You say you don't have W-2 income. Presumably you have rental income from your property. So I'm sure that you could qualify, but you need somebody who's expert in that, who can coach you through that. So that's job number one, is get yourself a good mortgage advisor. You said, is selling the rental homes to buy the motel outright a good idea? You're going from a business you know and presumably have had some success into a business you know nothing about by your own admission, I would say that's probably not a good idea. At least it's very high risk, and you need to go in knowing that it's high risk. The due diligence is going to be very specific to the deal, but in general terms, due diligence is making sure that when you're buying an asset, that the asset actually exists. Pretty simple, because you can go by and look at it, that it is properly titled so that when you own it, there's no hidden encumbrances. That's what property title insurance will do for you. Then you need to understand the business model. Where do the rents come from? And you have to have some way of auditing that. If it's performing now, you would look at past performance. If it isn't, then you would have to do some type of a comparative based on what's going on, or you would have to make your best guess projection based on what you think you could do. And of course, that's the biggest crapshoot. The rest of it is condition of the property. And I mean, so, the due diligence, it's just real estate 101. The thing to me, say, it's overwhelming. I don't know where to start. I'm going to go back to this idea of finding a mentor or a partner who is experienced in doing the thing that you want to do. And if it's really a good deal, inviting them to get a piece of it. And if they tell you, well, I don't want to do that deal because it's not a very good deal, well, that tells you what you need to know. If they say, oh, this is a great deal, I'm all in, then you're going to get both the help you need and a better chance of succeeding. And I would take a smaller piece of the action in order to get the lesson, than just try to go get the lesson the hard way by leveraging your very successful paid for rental homes and betting the farm on this motel that you don't have any experience in. So be careful, love the ambition, but I think if you're going to step out into an area you're not familiar with, you want to make sure you have a good mentor or a partner who's been there, done that, and don't be overly invested. You may have fallen in love with this little hotel and have a vision for what it could be. I don't know, but you can't let that cloud your judgment. You're going to have to just be curious and go where the research takes you, and then listen to the people who are better qualified than you to have an opinion.
Lots of folks start out investing in single family homes and then want to make the jump to apartment buildings. And it seems logical, right? People rent a house and they rent an apartment building, but those are two very different businesses. Motel, hotel, hospitality is a completely different business. So you want to spend some time getting educated specifically about the hospitality niche. You need to understand what ADR and RevPAR are. You need to understand that it's a business and not just a piece of real estate. Would it be possible for you to lease it to a master operator who took all the risk of the motel performance and hired everybody, and you just were a landlord? Well, that would certainly change the risk profile. But if you're going to be in the hospitality business, which I wouldn't dissuade you from, you just have to get that next level of education. But you're starting that right here today. So good luck, Hannah. It's Ask the Guys, your questions, our answers. When we come back, we're going to ask you a question as we play our weekly edition of Real Estate Trivia next. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Live nationwide, you're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
Real Estate Guys listeners, are you tired of losing real estate deals due to financing issues? Have you had enough of waiting on banks, lenders, and investor groups to fund new projects? What if there were a way to eliminate all the hassle and invest in real estate on your own terms? I'm here to tell you there is. Patrick Donahoe here from Paradigm Life. I'm an Investopedia Top 100 Most Influential Financial Advisor, and I recently wrote a best-selling book about the financial strategy that changed my entire investment model, and the one that could change yours. To get a copy of my book for free and learn how you can maximize your real estate portfolio by acting as your own bank, send an email to mybank@realestateguysradio.com. Don't make another real estate deal without reading my book first. Email mybank@realestateguysradio.com now to get your copy for free.
Hi, this is Sheriff Mack, and you're listening to the Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Thanks so much for tuning into the show. Hey, if you're looking for that next step in your real estate career, it might be time to look at raising capital from individuals to do bigger deals. Twice a year, we have an awesome 2-day workshop called The Secrets of Successful Syndication. Whether you're looking to raise capital to do bigger deals or find bigger deals to passively invest in, you'll want to join us in October for the next Secrets of Successful Syndication. All the details on the website at realestateguysradio.com. Under events, it's Ask the Guys today. Your questions are answers. Before we get back to the questions, it's time to ask you a question as we play real estate trivia. As soon as you hear today's question and think you might know the answer, send your best guess to trivia at realestateguysradio.com. You want to give us your name, your best guess, and your physical mailing address, because the first person to get it right gets this awesome book called The One Thing That Changed Everything. Amazing stories from positive folks with lessons you'll dig. That can be yours if you know today's real estate trivia question. On our last show, we had Paul Moore with us, and we asked you this: where is the largest RV park in the U.S.? Well, it's Brennan Beach RV Resort in Pulaski, New York, located on the eastern shore of Lake Ontario in New York. It has 1,400 campsites. It also has a half-mile stretch of sandy beach, a game room, swimming pool, library, playground, laundry facilities, and much more. That is a big RV park. Here's our real estate trivia question for this week. We're entering hurricane season in the Caribbean and other places. Here's what we want to know. Which country is affected the most by hurricanes? Yeah, what country in the world is most affected by hurricanes? If you know or just want to guess, send your best guess to trivia at realestateguysradio.com. Trivia at realestateguysradio.com. Give us your name, the answer to the question, and your physical mailing address. First person that gets it right gets the one thing that changed everything. That's today's real estate trivia question. It's Ask the Guys today. Your questions are answers. We'll get back to your questions now that you've answered one of our questions. This next question comes from Robin in Nashua, New Hampshire. Hey guys, at the last Investor Summit, many of the speakers suggested keeping dry powder to buffer the upcoming recession and be able to take advantage of deals of distressed properties. Where do you suggest keeping these reserves? All right, Robin, that's a great question. Let's just back up for a minute and talk about this impending recession or depression or whatever we're going to call it. A lot of folks think that we're sailing into headwinds, and that's for sure. In fact, there's people who are saying, I wouldn't buy right now. I'd wait. And there's folks that are saying, no, you can't believe all the hype. What we do know is that experts predict that interest rates, for example, will either rise or decline in the future. Nobody knows. Just 2 weeks ago, we were Rebel Capitalist Live, and there was one of the smartest guys we know, Jeff Snyder, who made a very, very compelling case that interest rates are headed down. On my way back from that conference, I listened to a podcast where they made a very compelling case that interest rates are headed up. So nobody knows. Nobody who pretends to know does know. And most people that are making these kinds of predictions will say, now, I don't know for sure. Our friend Peter Schiff is often making predictions and often wrong, but he's often right too. So you have to take your best guess in all of that. If we can just say that we know there's going to be buying opportunities, or we feel like there's a very good chance there will be, then we start accruing some dry powder for those days. Now, we don't just wait out the real estate market. We love to say that think and do is better than wait and see. So thinking and doing something, not just rushing out and buying everything, but being smart, being strategic, that all makes sense. And you should be doing that, not just waiting for the storm to blow over. But having said that, if you're thinking, well, hey, there's going to be some great opportunities, there's going to be a bunch of don't wanters. I think we're going to see distressed sellers in short-term rentals. I know we're going to see distressed sellers in parts of hospitality. And 100% we will be seeing distressed sellers in commercial, especially office property, in the coming 6 to 24 months. So if you believe that, then you want to have some cash sitting around. The challenge with dry powder is that every day, it's losing value. If you keep it in true cash, you know it's losing value. So what's a person to do? What do you think, Russ?
Well, I think when you consider it, let's just take a giant step backwards. We shared many times that we had the opportunity to ask Donald Trump this question about what he learned in the down times. And what he said was, it's always good to have some cash. But I think really what people are saying, and the summit speakers and every smart person we talk to, is it's always good to have some liquidity. The ability to act quickly when others can't. And presumably that means because credit markets are broken. You referred specifically to the summit. We asked Danielle DiMartino Booth, will the Fed continue to raise interest rates until something breaks? And if they do, what's going to break? She said they will, and they're going to break the credit markets. Well, that turns out to be exactly what's happening. So she was right. People who position themselves in anticipation of that are better positioned. Now, does it mean she was going to be right? She could have been wrong. So I think the purpose of being liquid is to be able to act when others can't. When purchasing power has exited the market, you want to have purchasing power. That's number one. So it's not just cash in the bank, and it's not just cash. So I think you want to have some cash outside the bank. I think that you can have dollars outside of the financial system or the banking system, and that would be using maybe 4-week treasuries. That's a place. I think having some precious metals would be something you could pivot into any currency, and it's a hedge against a falling dollar. Some people dump money into life insurance contracts that they can then borrow back out. I'm not saying that that's a good idea or a bad idea. I just know that people do that. Then, of course, money inside the banking system, at least on inside the FDIC limits, is another place you could do it. But one of the areas a lot of people don't think about, and one that we put a lot of time and effort into over the last 10 years after what happened to us in 2008, is in your network. If you build a big network of people who are all similarly working on becoming prepared and liquid for the opportunities that come, none of them by themselves may have enough money to act decisively to take advantage of the right opportunity when it comes out. Let's say you got 10 people that all have $100,000 liquid and a great apartment building comes up. Well, maybe you could get that apartment building if you had $1 million, but you don't, and none of them do. But together you all do. That's why we're such big fans of syndication, not just for taking advantage of opportunities in good times, but having a network of people that are liquid and ready to move when the market is illiquid. And so credit lines aren't bad. I mean, I wouldn't rely on them because if it's the credit markets that break, but the credit markets might not break. Maybe something else breaks. Maybe it's just the economy, and there's a lot of weakness in the economy, and people don't have purchasing power because their businesses aren't profitable. They don't have jobs. Maybe there's some shutdown or demographic situation or, regulation or something. You never know what is going to cause a downturn in a specific product niche or a specific geography or with a specific demographic. And again, we talked earlier about that's what we mean when we say markets. Real estate is not national, it's not global, it's local. So if you're paying attention to your local market and you recognize an opportunity, if you have cash, if you have credit lines, if you have a network of liquid people, if you have precious metals, some people would argue Bitcoin, I don't know. But I would say have your liquidity in a variety of different places hedged against both inflation, deflation, banking system failure, credit market failure, and have lots of smart people you're plugged into so that when that adversity hits the market and people are scared and it takes bold courage and faith to move forward, you're part of a tribe of people that have been preparing for this moment and that you can bounce your ideas off of just to get that 360 right before you pull the trigger.
Sounds like the kind of folks that hang out at our Investor Summit. Hey, if you want to get on the list to be among the first to hear about the 22nd Annual Investor Summit, then all you have to do is go to the website at realestateguysradio.com and you'll see Investor Summit. And so right now we have not yet announced the dates or location or any of that for next year's summit, but we are already heavily into the planning stages. If you get on the advance notice list, then you'll be the first to hear about it when we're ready to roll it out. We'd love to have you join us on the Investor Summit. It's Ask the Guys. Your questions, our answers today on the Real Estate Guys radio program.
Need help with your real estate investment portfolio? Check out the resources page at realestateguysradio.com.
For thousands of years of human history, silver has been recognized as money. Then in 1965, the United States took silver out of the financial system. But did silver stop being money? Smart investors don't think so. And ever since, when there are concerns about the quality of the currency, alert investors seek shelter in silver and gold. As the size and frequency of major financial crises grow, silver is attracting a lot of attention. To help better understand the what, why, and how of silver, watch the free 9-part series, Making Sense of Silver. Everything you always wanted to know about silver but didn't know to ask. Featuring 30-year precious metals veteran Dana Samuelson. Send your email requests to silverseries@realestateguysradio.com. Whether you own silver now or you're wondering if it's too late, email silverseries@realestateguysradio.com.
Hi, this is Kim Kiyosaki. I'm the author of Rich Woman, and you are listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. Hey, if you ever want to do bigger deals using other people's money or invest alongside big operators doing really cool stuff with professional management and high opportunity, then come on out to the Secrets of Successful Syndication. This is our 2-day syndication workshop, happens twice a year. The next one is in early October in Dallas, Texas. Get all the details by sending an email to syndication@realestateguysradio.com. Syndication@realestateguysradio.com. It's Ask the Guys today, our chance to hear from our listeners. We love when you guys have questions. If you have a question, you get to the website at realestateguysradio.com and click Ask the Guys. This question comes from Alexandria in Wonder Lake, Illinois. Hello, I've been studying nonstop for months trying to learn about apartment investing. I've purchased several different books, classes from lots of different folks, including some live events. After watching a particular training, the trainer stated that if we don't have enough money to invest in a deal that we're syndicating, then apartment investing may not be for us. I want to learn, but I'd have to spend most of my savings on the mentorship programs that are being offered, and I wouldn't be able to put any of my own money down on the first deal. Do you guys have any recommendations for me? Thank you for your time, Alex. All right, well, Alex, here's the deal. There's lots of places to learn about apartments, and we love apartments as an asset class. It's one of the best asset classes within real estate for lots and lots of reasons. But as I alluded to earlier, it's different than single-family home investing, and so you do have to learn a lot about it. But it doesn't have to be overwhelming, and you can learn while you earn. One of my favorite ways to get alongside someone actually doing it is to passively invest in their deal. Find a great apartment syndicator and put $50,000 into their deal and get educated while you actually have skin in the game. And I'm not telling you what to do, it's just a mentality. Our friend Robert Kiyosaki told us, took us aside many years ago and said, look, and he showed us his phone and he had just bought in Bitcoin for the first time. And we're like, wow, why'd you do that, Robert? And he goes, well, I won't pay attention to it unless I own some. If I own it, I'll pay attention to it. And the same thing would go here if you invested alongside somebody. But many of the people that teach, they have these programs. And you can go learn a ton from just the seminar. I mean, we have our syndication event. People come and they learn for 2 days and they go out and raise $1 million, $2 million, $10 million, in one case, more than $100 million just from attending the 2 days. But for many people, that's not enough. And so we have an advanced program. Now, if you come to the Real Estate Guys event, there'll be no run to the back of the room today and day only. We won't hammer you into investing in our ongoing program. But for many people, it is the key to unlock the vast wealth you can create in syndication, having not just access to hundreds of hours of training, but a community of syndicators and live events and virtual events and all that support. So you can't just out of hand say, well, I went to a seminar and they're pitching a program. Well, okay. The question is that program an expense or is it an investment?
Right. Tom Wheelwright says in business, there are no expenses, only investments, and some of them have good ROI, some don't. We teach all the time that you are personally responsible for ROI. If two people can walk into the same room, hear the same material, and one person makes it happen and another doesn't, it's not the material.
Right.
It's the person. So it takes a lot of personal responsibility. In this case, Alexandria, what I am reading in this is a little bit of a student mentality, which is you're learning in a vacuum. You're studying on your own. I have been studying. So I would change that to we and find somebody to study with. Immediately make it a team sport. I think that's the first mental adjustment to make. Number two is instead of doing these stay-at-home classes and reading books in your quiet time and watching the TV or the video in your own privacy of your own home, get together with people who are like-minded, go to seminars, and you're not going just for the information, although the information is valuable. You only need one great idea to make it worth it. And of course, you focus a lot more when you're in a dedicated space and time where you're not trying to multitask or do other things. So we're big proponents of live events, as you probably know from listening to us for any length of time. But you also get a chance to meet other people and build relationships. In terms of really dealing with your core problem, which is, hey, I don't have enough money to go do this on my own, Well, that is exactly what syndication is about. And the core of syndication is sales, the ability to say, hey, I've got a vision for something that we could have together if we work together. I bring something to the party and you bring something to the party. And if we can find a way to put those two things together, we can both have something we both want. So it's a whole lot of we and not very much I. And so it's not about what you want, but what you can give. In your case, you're willing to put in the time and study. You're probably a very intelligent person. It seems like you're willing to put in the time and hustle. And what you need is somebody who maybe has more money than time, or maybe somebody who has more deals than time or more experience than time. And it's not just one person. It could be a network of people. You could have somebody or a group of people that have more money than time, but are interested in the space. You could have a bunch of people that have more deals than money. And now you've got the people with the money and the people with the deals, and you can put yourself in the middle of that. It's finding people that have time and expertise that you don't have, and you find ways to put these people together in some type of a business relationship where team together, everyone achieves more. Everybody gets a piece, everybody contributes something. And the key to doing that is to identify in yourself, what do I bring to the party? What do I need? Then what does the other person bring to the party? What do they need? And if you think like a Venn diagram with these circles, so there's going to be an overlap where everybody has something that links them together. Everybody's getting something and everybody's bringing something. That's the art of putting together an alliance, and that's the art of syndicating. And so I would put my time and attention into figuring out how to do that. Because it's a lot faster to learn how to do that than it is to double or triple your income, learn how to mitigate your taxes and live below your means and save money. You should be doing those things. But the fastest path is to work through other people who have already figured out how to do some of the parts that you haven't figured out how to do yet, including earning a lot of money. There's people that earn a lot of money and they have no time. You can bring that hustle, that expertise, and that deal flow to them, and you're providing a valuable service to them. So don't underestimate what you can do and take your eye off of what you can't do. Just focus on what you can do. You have a lot to work with.
Now, I've just done some preliminary research for you, and there are still flights from Illinois to Texas. So you can come out to the Secrets of Successful Syndication, and the benefit of that is that you'll learn a ton. That's great. You're going to get a big workbook and take a bunch of notes. But the way bigger benefit is there are going to be hundreds of other people in the room, many of whom have already raised substantial capital, and their issue is not, I only make $54,000 and I'd have to put all my money in one place. They have very different issues because they're raising $10, $20, $50 million a year. If you want to get around people like that and learn from them, then come on out to the Secrets of Successful Syndication. It's the first weekend in October in Dallas, Texas. You can find out about this event, plus all the events that the Real Estate Guys either produce or promote, meaning our events and the events that we're invited to speak at. If you go to our website at realestateguysradio.com and look at the button that says events, there's all kinds of events. There's virtual events, there's live events, and as we've said many times today, we're very big proponents of getting out and meeting the people, pressing the flesh, finding out, and then getting in conversations. So you learn from the stage, and then you shoot those ideas around over coffee or a beer, and that's when it can really start to make sense. So we wish you great success and hope to see you at an event, Alex. Well, that wraps up today's Ask the Guys. We've got a few more questions we didn't get to, so we'll be scheduling another one of these programs. And if you want to get a question to us, just go to the website at realestateguysradio.com, click Ask the Guys. Next week, a fabulous show. Until then, go out and make some equity happen.
This episode of the Real Estate Guys radio show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers. Low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct. Asset protection strategies for real estate investors. From attorney and Rich Dad advisor Garrett Sutton. Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys Radio Show.